Hello, everyone. How are you doing this fabulous evening? I hope everyone has been having a great time in their own work or priorities. But when it comes to the live streaming sessions, we are here to provide you with high value content. So, everyone who is present, let me know how many of you are ready for today's third live streaming session. If you are ready, do let me know in the comment box below. So, let us start with today's third live streaming session with a quick introduction about me, right? I am Harsh. I am a financial trader having 8 years of trading experience in the markets. I have been trading the forex markets, the commodity markets, as well as the US based indices markets. I am a technical trader specializing in technical analysis, correct? Such as supply demand, price action, order flow analysis, swing analysis, wave analysis, as well as Fibonacci retracement analysis. I have been blessed to be a part of a team of mentors who used to work previously as floor traders on the Chicago Mercantile Exchange based in United States of America. So under their guidance, I have been fortunate enough to gain a lot of value in terms of experience. I have also been successful in handling $25 million worth of portfolio, and on top of that, I've also been successful in generating 30 to 35% of profitability on an annual basis. The reason for me to share all this information with our lovely community members is so that you all can be rest assured that the information that Harsh is providing to you is coming from someone who has the knowledge, the experience, as well as the expertise when it comes to the financial markets. So let me know how is everyone how is everyone doing. I hope everyone is having a fabulous day. And for all of those who have celebrated Christmas yesterday, I hope that you have had a wonderful evening, a wonderful day with your friends, families, children. So, how many of you are excited for today's third live streaming session? If you are excited, let me know in the comment box below. Remember, I would love to have an interaction with you. Yes, Harsh will be doing most of the talking in terms of content, but when it comes to Harsh asking you questions, whether it is your opinions, whether it is your questions, queries, or your responses, it would be lovely if I could get your reactions to those comments. All right. So anytime you have a question, you can let me know in the chat box below. So are we good to go for today's third live streaming? If yes, let me know in the comment section. All right. Now, let us start with today's session. So, moving forward, based on the last live streaming session where we had talked about prohibited actions and corresponding solutions. How many of you have attended last streaming session where we were talking about the problems that people have when it comes to repeating mistakes in the financial markets and how we can overcome those problems by giving solutions. So all of those who have attended the previous third live streaming session, um, do let me know in the chat box and let me know whether you remember and recollect. All right, because these live stream sessions are for your benefit. I am going to be making sure to provide you with high value content, and that is exactly what I'm providing. So, any one of you who would want to answer this particular question, um, it's not a question, but it's just a recap. How many of you are able to recollect what had been discussed yesterday? What are the prohibited actions? Could you let me know in the comment box below? All right. So we had discussed four key mistakes that people have been making, right? Anyone, what is point number one? Point number one is rushing to buy. How many people are recollecting now? So the first point is rushing to buy. People rush to buy trades because of fear of missing out. How many people recollect? We talked about FOMO, correct? Fear, sorry, fear of missing out. People do not want to miss an opportunity that everyone is rushing towards, right? And that is eventually that leads to big losses in the markets. So rushing to buy, very important and very crucial. All right, how many people are understanding? This is just a recap of last week's session. Second is being too greedy when selling, right? We have a habit of taking trades and expecting that we can multiply the account instantly based on one or two trades. How many of you had certain scenarios in the past when you were trading by yourselves where you encountered certain scenarios? You want to enter, for example, you want to enter at 100 rupees per share. All right, if a share is running at 100 rupees and you have entered at 100, the price, for example, starts to go to 200. You are like, okay, maybe it might go till 250, 300, 350. There is no end, and we start becoming greedy. So being too greedy or letting the positions run with the ultimate goal of making as much of profit as possible. How many of you have made this mistake? Let me know in the comment section below. And third, we would be talking about delaying stops, right? Not cutting stop losses when they should be cut, right? We had given you the example of people, for example, when they fall ill. So many of us would not go to the doctor to rectify our symptoms, right? We should be going to the doctor if we start falling ill. But many of us, they do not go to the doctor. What they do is they wait for their symptoms to get severe, to get out of control. And that is the time they realize that, okay, now I feel that I am having an ailment, an illness, and I should be going to the doctor. But in reality, they are already too late. Excuse me, everyone, for my voice. Unfortunately, I have got viral and my I have a sore throat. So I just want to let everyone know that I'm still trying my best in terms of providing our customers, our clientele, our community members with high value content, right? If you love my dedication towards providing content, even when I'm not keeping well, show me your love and affection in the chat box below. All right, so we talked about being too greedy when selling and not delaying stops. We were talking about the third point, delaying stops, because when people do not cut their stop losses when required, it can lead to severe drawdowns, right? How many people are able to understand? So when I was talking about the example of a person not going and showing themselves to the doctor when they are ill initially, can create massive problems if they go later on. So the same ideology is affected in the stock market, where if you have to cut a stop loss, or if you have to cut a trade based on a stop loss, you should know what needs to be done, right? And not wait when things go out of hand, because when things go out of hand, you are already way too late. All right, so how many of you are understanding? If you are if you are understanding, let me know in the comment box below. And anyone who can recollect point number 4, so point number 4 is over diversifying, correct? Over diversifying, when people take too many positions in too many different stocks, that is called as over diversifying. So these have been the 4 points or the 4 prohibited actions that people make when it comes to the financial markets. Now, we would be talking about the corresponding solutions. Let me remember and let me ask everyone, or let me tell everyone that all these points have already been discussed in the previous live stream session. We are just having a quick recap. So anyone who would want to let me know what are the 4 corresponding solutions to the mentioned prohibited actions, if anyone knows the answer, let me know in the comment box below. So first, for the point that we had discussed when it was related to rushing to buy, what should be the alternative to rushing to buy? We should buy calmly. How many of you understand by the word buy calmly? We need to be having patience. We should not be running behind trades. We should be aware that there is a movement taking place in the markets, but we also have to utilize our mindset and see that entering the trade when everyone is buying, is it the right choice? Correct. Second, we had discussed about being too greedy when selling. So what is the corresponding solution to being too greedy when selling? Selling without greed, right? It is as simple as that. When you should be closing a trade, you should close the trade. It's not about over expectations, right? All of us have fallen into the trap of over expecting from the markets. And when people over expect from the markets, it is not a good sign, it is not a good behavior, because in the long run over expectation leads to massive losses in the markets. How many of you are understanding? If you are, let me know in the chat box below, because you have to understand, if you're selling without greed, you know exactly that you're being making money consistently in the market. If you are coming with the expectation of, or with the expectation of overachieving or making much more profits in the markets, maybe you can be lucky by one or two trades, but in the long run it is not healthy, right, when it comes to the markets. Then we had talked about delaying stops or not cutting stops quickly when required. So, what is the alternative? What is the corresponding solution for this? So, the corresponding solution is cutting losses quickly. When you know that the trade is not going in your favor, you should be clear in knowing what should be the next step of action. Correct? It is not about hoping and expecting and not having an action, not having a plan of action. So, cutting losses quickly is the corresponding solution. And for the fourth point, over diversifying, like I had mentioned, so the corresponding solution is diversifying on fewer stocks, because I had mentioned it in the previous session that if we are the retail investor who come in the category between a couple of thousand rupees to 30 crores, we are in the category of retail investors. So for a retail investor, the average size for diversifying is five stocks, right? Any diversification above five stocks is considered to be as over diversifying. So we have to make sure that we are able to diversify but maintain the diversification limit to five stocks, right? Anything above five stocks is unreasonable. So I hope everyone has got a good understanding, excuse me, in terms of what are the prohibited actions and what are the corresponding solutions. Now, moving on to the slide, today we will be focusing on risk management, right? So, before we move on, I want to ask our audience members, our community members, how many of you are aware of what risk management is? If you are aware, let me know in the chat box below. All right, so people are saying yes, we are aware of risk management. Good. So when it comes to risk management, what exactly is risk management? People, please let me know in the comment section below. People are saying yes, risk management is about controlling risks, not losing money. So all points that you have been mentioning are true. All right, they are correct. But you have to understand the crux or the initial intention when it comes to risk management, right? Because at the end we are talking about trading logic. So when it comes to risk management, you have to understand that in trading, sorry, when it comes to trading, it's not about the mistakes that scare us, but it's about the hesitation to correct them. How many of you agree with this particular point? Trading, it's not about the mistakes that scare us, but the hesitation to correct our mistakes. Sometimes we are caught up within ourselves because of our ego or whatever reasons it could be, that we consider that only we are right. And when things go against us, we do not know how to handle situations. Am I correct? If you agree with me, I want you to let me know in the comment box below. All right. So everyone is making mistakes, correct? It's not about making mistakes, but understanding that we need to correct if we do not know what is right. because trading is a matter of probability. So making mistakes is not dreadful. Everyone who comes with the expectation that in trading we have to take each and every trade that we are taking has to make money is not practical. I hope everyone is understanding. Trading is always based on probabilities. So making mistakes or making losses is going to be a part of the game. If someone is making 100% profits, that is next to impossible. Trading is based on probabilities, and it is making mistakes that are apart, making mistakes or making losses, right? The meaning remains the same. So it's not dreadful about. What is dreadful is knowing that it's wrong but still persisting and refusing to give up. It all boils down to our ego, our stubbornness, that we know everything and that we cannot be wrong. So when the markets prove us to be wrong, we do not know how to handle. And that is one of the main reasons that people are having losses in the financial markets. If you agree with me, let me know in the comment box below. All right, listen, moving on. This is going to be human nature, right? This is not just based on you, it is based for everyone. Everyone has a grudge. To For some it is going to be on a less extent, for some it's going to be on a bigger, on a much larger extent, but everyone does have this kind of personality trait. If you have this trait, let me know in the comment box below. So, before moving on, like I had talked about the point number three, right? When we had discussed in terms of the mistakes that we are making and the corresponding solutions that I had provided. When we were talking about not cutting trades when required, right? Not exiting or not implementing risk management when required. When I had given you the example of person who gets an illness, right? Or such as cold, if you do not take control and do not go to the doctor to show it, a simple illness such as cold can turn into a severe condition like pneumonia, right? How many of you have been aware that certain based on friends, family members, that someone who thought that they had a very minor illness actually got converted into a severe illness, right? So rather than going to the doctor and showing and rectifying the issue, they do not, because of the grudge that they know that what is happening with them, they can control, right? When in reality, they should exactly know what needs to be done. Am I, or I hope people are understanding, right? So this is going to be human nature, and we need to make sure that we can start to work on it, right? It is very important because our concepts when it comes to education, yes, we can do a lot of talking about price action, technicals, fundamentals, but if your base, that is your mindset, your initial intentions, aspirations are not clear or are not, solid, it does not work. No matter how much money you will make in the markets, you will eventually return it to the markets, right? I am sure it's been happening with most of you, and that is the reason you are coming to us, so that you can gain knowledge as well as gain monetary value based on our hot stock recommendations, correct? And that is exactly what we want to provide to our valuable customers, the power of learning and the power of earning. All right, so moving forward, how to set how to set stop losses. If anyone can answer this particular question, I would love it. How would you as an individual set your stop losses? If you know the answer, or if you have the required answer, let me know in the comment box below. So people are saying, yes, we know how to set stop losses. We can put stop loss. We can hedge. Okay, we are getting some different answers. Um, we can add positions. Okay, everyone is thinking out of the box. Very good. So we are getting good amount of reciprocation, and that is a good sign. All right. Very well, everyone. Good job. So moving forward, how? Let me ask you, if we come across a scenario where we are having a 10% drawdown. So will you be setting up your stop loss during this particular scenario? If yes, let me know in the comment box. Will you set up a stop loss if you're losing 10%? Let me know in the comment section below. All right, scenario number two. What if you're losing 20%? If you're 20% in drawdown and you are expected to set up a stop loss, will you set up a stop loss? Let me know your comments in the comment section below. All right, scenario number three. What if you have a drawdown of 50% and you are expected to put the stop? You are expected to set up a stop loss. Let me know your comments. Let me know your answers. I want to know your answers. So, based on the data, all right, we are getting your answers that yes, I mean, it is very frustrating and very painful to be setting up a stop loss. But based on the data that has been provided by the stock exchanges, 90% of stock traders lose money regardless of whether it's a bull market or a bear market. How many of you agree with me on this particular point, right? Whether the markets are in a bullish phase or in a bearish phase, it does not make any difference because 90%, right, over 90% of investors or traders are losing money in the stock market, even when there have been decades of bull market run in the Indian stock market. Why is it that majority of the investors and traders are losing money? You should think about it. If the market is overall bullish, shouldn't everyone be making money in the stock market? But on on the contrary, people are losing. Majority of the people are losing money in the stock market. If you agree with me, let me know in the chat box below. So remember, when it comes to the market movements, there is little to do with your individual stock market holdings. The overall market movements have little to do with your overall or your individual stock holdings. Now, whether the index is bullish or bearish, why is it that people are losing money? Does anyone have the answer? If you have the answer, let me know in the comment box below. Yes, people are writing. Yes, people are losing money, and it is okay, no problem. So now we will be elaborating on stop losses, right? Let me elaborate. Let me ask you, or let me depict a particular scenario where you have decided that you want to put a 10% stop loss on every trade that you are taking. All right, imagine for a minute that you are a trader who has decided that yes, moving forward I want to take 10% stop loss on every trade I take. Now, unfortunately, or worst case scenario, there are 10 trades that are taken by you, and all the 10 trades have hit your stop loss level. How many of you have encountered such situations in the past when you have been trading by yourself? Let me know in the comment section below. So if you are taking a 10% stop loss on each and every trade, and for worst case scenario, if all the 10 consecutive trades that you have taken end up with a stop loss, you end up wiping your trading account, right? Has it happened with anyone? If it has happened with anyone, let me know in the comment section below. Remember, it is possible, right? But many people might be saying that, but that is not possible. How can someone lose 10 trades consecutively, right? No matter if it is 10 trades, there has to be a matter of luck where people should be making money, right? Because people think that trading is about luck and that trading is based only on luck. How many of you believe that trading is based only on luck? If you think trading is based on luck, you are wrong. All right. So when people are saying that no, my luck wouldn't be that bad, I cannot be losing money 10 times in a row on 10 consecutive trades. But believe it or not, it is a normal routine. It is very common in the markets for people who have taken 10, sometimes even 20, 30 trades, and all of them have been, resulting in stop loss. Has it happened with you that you are taking trades consistently and all of them are hitting stop losses? If yes, let me know in the comment section below. All right. So moving forward, many people are using stop losses, right? Thinking that it is helping them in terms of managing risk. But whenever a stop loss is hit, the account balance gets dwindled. It starts to diminish. How many of people are understanding this? People put stop losses with the expectation that they are managing risk. But think about it, with every trade that you take, and if you are encountering stop losses at every single point of your trading career, wouldn't that be diminishing your account? So if you started with 10,000, or sorry, 1 crore rupees, and you start taking 100,000, in terms of stop losses, 100,000 is 1 lakh rupees. So if people are taking trades with a risk management of 1 lakh rupees and they're losing money, the account balance starts to dwindle, it starts to shrink. And believe it or not, this starts to affect, right? Therefore, risk control is to safeguard the account, but it's not the only one. How many people are understanding? Just putting stop losses is not the only way to manage risk. There are other factors as well. How many agree? If you agree, let me know in the comment section below. Some people might be saying that yes, Harsh, we understand that putting stop losses results in dwindling of the account, and that is not good mentally as well, right? How many people are agreeing with me, right? Trading is about studying entry points, not studying stop loss levels, right? How many people are understanding? Because future movements are unpredictable. Now, whenever you take a trade, you expect the market to go in your direction, right? How many of you who are into the financial markets are entering and expecting that I will take a trade and it has to go to my stop loss? How many of you are thinking like that? Correct? Many people would be saying, of course not. Who enters the market with the intention of losing money that it has to go and stop out? But in reality, that is what is happening, correct? People are taking trades and people are losing money, right? When it comes to the financial market. So we need to be aware that whenever we take a trade, how many people have come across a scenario where you take a trade, you enter, and the prices go and hit your stop loss, and after hitting your stop loss, the markets reverse and start to go to your direction? How many people have had such scenarios? If yes, let me know in the comment section below. I have had this in the past where I've entered and I've put a stop loss at X value, and the prices go hit my stop loss and eventually return back to where I was expecting the prices to achieve my take profit, right? If it has happened with you, I would want you all to let me know in the comment section below. So, moving on, your mindset will definitely collapse, as in how you start taking losses, physical losses. Remember, stop loss. When the markets are going against a position, and if the position is running, it is called as a running loss. But if you set a stop loss, physical stop loss, and the markets go and hit your stop loss, that is as good as your accounts dwindling, diminishing, because now that you have placed a stop loss, you are taking physical losses on your trading account. So you have to be aware, even though if you're taking, no matter how conservative you're being in terms of risk management, but whenever a stop loss is hit, it always affects you mentally, correct? Based on a mindset level, you do get, it shakes you, it torments you, it tortures you, right? You don't feel good about it, so your mindset might collapse and you might regret why you have put in the stop loss, right? We have taken a trade, we have put a stop loss, but the market goes, hits the stop loss and goes in our direction. It has happened many a times with me. Has it happened with you? If yes, I want to know your answers in the comment section below. Then we have this mindset where we expect that if we would have not put a stop loss, we would have been making good amount of money, we would be making good profits. Has it happened with you? If it has happened, please let me know in the comment section below. All right, so going through this over and over again can definitely ruin your trading career. Have you often experienced this in the stock market? I am sure every one of you or most of you have experienced this when it comes to the stock market. I have experienced it myself, and I'm pretty sure, based on my years of experience and expertise with other people as well, when it comes to the stock market, people have been having this kind of scenario that takes place with them, where they get stopped out consecutively, right? Trade after trade, and it affects them mentally, and they have no experience in terms of how to cope with it, how to control it. Has it happened with you? If yes, please let me know in the chat box below. So moving forward, you have to be aware that it's not you do not have to be ashamed if you have had these experiences. I am myself being quite honest and open with you that it has happened with me when I had initially started, right? When I was learning, when I had very few years of experience, I have had the same scenarios, right? So you don't have to be embarrassed, right? You need to start taking accountability. It is high time that you can keep your ego aside when, especially when you're attending my live stream sessions, because I keep mentioning to all my viewers and to all my community members, it's not about being right. It's about making money. So rather than being right and fulfilling or satisfying your ego, it is high time that you keep your ego aside and start to make real money. How many of you would want to start making real money, real profits in the stock market? If you do, let me know in the comment section below. All right. So moving on, we would be looking at, and our courses are exactly designed for this, right? We want to make sure that people are, are able to learn from their mistakes, and we will provide them in terms of all the tools and resources that would be required. So we will be providing you with all the necessary actions, all the necessary tools and resources that can be making you good amount of profits in the stock market. And if you want to make good profits in the stock market, make sure to keep attending all our live stream sessions, right? How many of you are willing to attend all my live stream sessions? If yes, I want to know your answers in the comment section below. To all of those who have recently joined, I just want to let everyone know that I have been suffering from viral, and my throat has taken a toll. But just to make sure that I can provide high value content to our beloved community members, I am taking the extra effort and initiative to provide you with content even though I'm not well. So I would really respect everyone and request everyone in terms of attending the live streaming sessions and making the most benefit out of these sessions. Who are willing to attend all the live streaming sessions? Let me know in the comment section below. All right. So we would be making sure to provide you with all the tools and resources. Just make sure that you're being attentive for all our live streaming sessions. Is that okay? All right, good. Now, so many people have been trading stocks for years, right? How many of you have been trading stocks for more than 2 years or more than 5 years? No matter the number of years you have been trading, let me know in the comment section below. Because even though if you have good amount of years in terms of trading experience, that still doesn't mean that people know everything, right? Many people have been trading for years, but they still don't know how to do it properly. Does it resonate with you? Does it connect with you? Has it happened with you in your own trading journey? If yes, let me know in the comment section below as well. So, for instance, how many people are able to think and already have a plan of action in terms of how much capital do you use for your trading? How much of capital do you allocate for each trade? When do you exit a trade after making a profit or loss? How many of you are crystal clear when it comes to having these set of parameters even before you enter a trade? If you do, I want to know your answers. And if you don't, I want to know your answers as well, because that is how I will have a reference or a guide in terms of how many people actually follow a trade plan, right? If you do, let me know in the comment section below. So people are saying yes, some of them are having a trade plan. Some of them are saying no, we don't have a trade plan. So you have to understand it is important to have these points which are of vital importance, right? People generally just enter the markets or join the markets just to make quick money so they can get profitable quickly. That is not how the stock markets work, right? For anyone who's providing you this information that you can make quick money very quickly and only 100% profitability, then you are having the wrong advice, right? You're having advices from people who do not know how the markets work themselves. So you need to be clear of some parameters like these, like the ones that I've mentioned on the screen, and not just focus on instant money, right? So many people have no concept of these. Am I right? If I'm right, let me know in the comment section. Many people think it's only about quick money and that is it, but that is not at all the case. If you do agree, let me know in the comment section below. All right. So I had a friend of mine who has been a long-term client, and they have been and when I asked them this question, they replied that before joining the live stream session, they were just following other people's advice. How many of you had similar encounters in your own personal trading journey? If you did, let me know in the in the comments section below, because it is important to understand and it is crucial. People need to be honest about it, right? It's not about being ashamed, it's not about being embarrassed. It's time to take accountability and start to make changes, because only if you make changes can you start to see things differently. You start to see things different from a different perspective, and that can definitely create awareness and will eventually lead to financial success in the stock market. Am I I hope everyone is being able to understand, right? If you have any doubts, queries, please do let me know in the comment section below. So, the basic logic of stock trading is unclear to many, which explains why they can't be making money. All the points that we have been discussing are to showcase you the real, authentic nature of people when they enter into the financial markets. They come with a completely different intention or aspiration when they initially enter the market, but as and how time progresses, their intention changes. And so that is the reason when it comes to people who think they know everything, when they do not know, the basic logic is unclear, right? It's not just about clicking the button and making money, it's about understanding the faults, understanding our behaviors that are making us take trades in the market, that are eventually making us lose in the markets. And that is what needs to be paid full attention to. How many people are understanding this particular point? If you are understanding, let me know in the comment section below. Stop losses involve static or constant risk, right? Such as when the markets start to retrace after you have entered a trade, which all traders encounter. How many of you understand with what is a static or a constant risk? If anyone knows the answer, let me know. So, static or constant risk is when, for example, let me give you a scenario where if you have entered at a stock, for example, which is trading at 100 rupees, now you expect that I want to enter at 100 rupees for whatever reason it is, and you are putting a stop loss at 95 rupees because you believe that if the market goes below 95 rupees, you are wrong and you are expecting to exit. But whenever a trade is placed, how many of you have encountered situations where you take a trade and the trade flies in your profit target direction? How many of you have faced such instances in the market? And how many of you have faced instances in the market where you have taken a trade and you see that the markets are going against you? If you have faced this encounters, let me know in the chat box below. So yes, people are saying, yes, we have encountered scenarios where most of the times when we take a trade, it goes against us. So whenever you place a stop loss, it will always have a static or a constant risk. Risk of prices going against your direction and stopping you out before they eventually go back in your desired direction. Am I making sense? I hope people are understanding. We are trying to uncover the most basic psychological factors that make people lose in the markets and how we can overcome that. That is exactly the objective of these live stream sessions. Okay, good. So it is up to decide whether we want to exit with a small loss or we want to reduce risk through hedging and averaging down. So, like I had talked about, where people only consider stop losses to be the main source of risk management. But in reality, it's not just about stop losses, but there are many other factors which one can incorporate in their accounts in terms of managing risk. Some of them are hedging and averaging down. Hedging is, for example, if you have a stock that is going up in value, and for whatever reason the markets are following, so you take an opposite trade on another derivative, right? It could be the futures or the options, and that is where you mitigate the risk by taking a counter position on the derivative of the underlying stock. And the other method is called as averaging down, where if the prices are, you have taken a trade, for example, at 100, and the prices are correcting, as in they are declining, so you could be adding positions. What is the significance of adding positions? Anyone? Correct. So the significance of adding positions is that the average prices reduces or lowers down. So then when the market reverses, you do not have to wait for your initial positions to reach to break even for you to think about making money. Since your average price would be reducing. For example, if a stock is at 100 and the stock, you take a long position at 100 and the stock reduces and comes to 50 and you enter a second trade. So 100 plus 50 divided by 2 is how much? 75, correct? So 75 is going to be your average price. So rather than waiting for the market to reverse from 50 and go to 100, in terms of making money, you just have to let price approach the 75 price level, and that is when you will reach to a situation that is called as being break even. How many of you are aware of the term break even? If you know the term break even, let me know in the comment section below. So break even is a situation where you're not losing money and you're not making money, correct? So you are at break even. You are back to where you had started. But rather than waiting for the prices to reach back to 100, now you just have to wait for prices to reach back to 75. So the chances or the probabilities of price to at least retrace back to 75 increases exponentially, correct? So these are some of the methods that people can use, and it's not just based on stop loss, right? It is based on there are other risk management protocols that people can follow. Now, stop losses also include systemic risks, right? What do you mean by systemic risk? Anyone? Before you read the slide, I just want to have your own interpretation if you understand by what is meant by systemic risks. So everyone is aware about FIIs and DIIs, correct? Am I right? If everyone is aware about it, if you're not, let me know in the comment box below. So FII stands for foreign institutional investors, right? When the FI investors have been consistently exiting the markets. How many of you are aware that since the last couple of months, right, between the last 2 to 3 months, the prices of Nifty and Sensex have been declining or have been correcting. The Sensex has declined by more than 11.5% just based in the last 3 months. Why is the Sensex or the Nifty declining so much in the last 3 months? Right? It is mainly, yes, there are many factors, but the main factor is because of foreign institution investors who are pulling out funds from the Indian economy, and those risks are called as systemic risk. When you think that you know that the market should be going up, but because of the underlying factors which are macroscopic, right, which are beyond just about the stock market, it's way beyond the stock market. It involves politics, world relationships, and a lot more. So when these factors are at play, no matter how confident you are that the prices will be inclining towards the upside, the overall sentiment remains bearish. And that is why you have to understand, when the FIIs have been pulling out funds, the index starts to plummet or starts to diminish or correct. And if the index is correcting, the tendency for the individual stocks to correct also exists, right? Because most of the stocks are following the index, right? What is an index? Anyone who would want to answer what is an index? An index is nothing but a collection of stocks, right? So if the overall sentiment, remember, overall, not all, overall sentiment, majority of the stocks will follow suit, correct? If the index is going down, majority of the stocks will follow suit, will continue with the direction of the index. So stop losses include uh, stop losses include static or constant risk as well as systemic risks. How many of you are understanding? If you're understanding, let me know your reactions in the comment box below. So, in such cases, when there is constant or static as well as systemic risk, what are the alternatives? What do you do? Do you choose to close your stop loss, or do you choose to close your trade and exit with a stop loss, or do you prefer to hold on? Let me know your answers in the comment box below. People are saying, yes, we should close with stop loss. Some people are saying we should close, we should hold on to trade. Some people are saying we should add trade. So there are many answers coming in, correct? Regardless of your response, I want to tell you that we all face the same systemic risk. No matter how well we get, or how advanced we get in terms, or how experienced we get in terms of the stock market, there is always going to be a factor of occurrence of systemic risk, right? When the FIIs are pulling out funds from the economy, no matter how well the fundamentals are talking, no matter how well the technicals are talking, the overall index tends to be bearish, right? How many of you are agreeing with what I'm saying? If you are agreeing, let me know in the comment section below, because very important to understand these concepts. We just come in with into the market and expect to make money. Yes, you can be correct couple of times, right? Maybe once in a while, once in a blue moon. But if you want to be consistent, there needs to be a very clear structure, right? Structure in terms of trade analysis, structure in terms of psychology. So there is a lot of emphasis that goes just, and it's not just stuck at taking trades on a trading platform. It's much more beyond that, all right? If you're agreeing with me, if you're understanding the significance of what trading logic is and how risk management is an integral part of trading logic, I want to know your answers and your comments in the comment box below. All right. So at this time, whenever we are having losses, especially when it's based on, or when the markets are having systemic risk, right? When the FIs are pulling out funds from the economy, majority of the people start to panic. Majority of the people start to run around crying or being fearful that the markets are tanking, the markets are falling down, the markets are melting. It is at that time that you are tested, right? It is at those moments that you are tested. And that is the time when you need to be sure to keep calm and not be swayed by market panic. If everyone is panicking, everyone is thinking about closing positions, everyone is running helter skelter, just wanting to exit because they think the markets are going to crash. But that is not the truth, right? When there is systemic risk, there are institutions and retail investors who have positions. Whether the markets are correcting, whether the markets are bullish or bearish, the markets are still going to comprise of FIIs, right? Institutions, whether it is foreign investment institutions, domestic investment institutions, you are going to have market participants, right? All types of market participants. So do not expect just because the markets are falling that all the institutions, all the main funds, right, have exited from the market. It's not at all the case. They are still in the markets, right? Still taking positions. So if if institutions are not afraid of losses, we as retail traders shouldn't be afraid as well, correct? Because the general notion goes in terms of If people have been losing money in the markets, right? People consider the institutions to be enemies of them in the market. It is because of these institutions that people lose money. I have got a lot of comments, a lot of responses where people say it's because of them that we are losing money, or it's because of they or whoever it is that we are losing money. But please let me ask you the question: who takes the trade when it comes to the stock market? If you are taking a trade on your account, you are the one who's taking the trade. So no one else is to be blamed but you. We, being humans, have the intricate nature of putting blames onto people. You need to stop putting blames onto people. You need to start taking accountability. If you do not know how the markets work, learn from people who can teach you about how the markets work. If you're losing money in the markets, learn from people who are making money in the markets, and learn from them or replicate their actions, right? It is as simple as that. People just want to enter the markets, and by hook or by crook, they want to keep making money. But in reality, the the reports suggest that it's completely opposite. Majority of them are losing. So when institutions are in the market, even though there is systemic risk when the other big institutions are pulling out, not all institutions are profitable and are making money consistently, right? Let me get that point of clarity. Not all institutions are making money. It's only a few institutions that are making money consistently. So if you're thinking that the markets are crashing, that and all the institutions have left the market, that is not at all the prime concern. The institutions will still be in the market. So if they are not afraid by themselves to close positions, or they are not afraid of losses, why should we be afraid of losses, correct? But please understand, there is a fine line between madness and smartness, right? I'm sure every one of you would have heard this terminology. You need to be smart, but there is a fine line between being smart and being over smart. So remember, there are going to be situations where we should set stop losses, and there are scenarios where we can let the trades run, right? So there is going to be a difference, and all this information will be provided to you as and how you start being a part of Dolphin Markets, as and how you start being a part of Harsh's live streaming sessions. Am I correct? So we will be teaching you with all the required information. We will be providing you with all the required tools and resources that can make you aware of when to put a stop loss and when to hold trades. Am I correct? So if you cannot distinguish between when to put stop losses and when to let the trades run, you can always get back to my team of assistants, and they will provide you with the necessary information that is required, right? So I hope everyone has been having a good understanding. To all of those who have joined late, I just wanted to let you know that even with me being ill, I am still taking the initiative to provide you with valuable content. And I sincerely and humbly request all of you to take value from our live streaming sessions, because we believe in providing more value than people can even expect, right? I'm sure there are many competitors out there who are not even close in terms of us when it comes to providing such high value content, right? If you are aware of any, I would want to let you I would want you to write in the comments. And if you are aware that we are one of the first companies out here who are providing with such high value content, I want to know the answers of those as well. All right. So there's only a matter of time that you keep attending the live streaming sessions with the trade recommendations that we are providing to you, with the learning sessions that you can get acquainted with so that you can improve your knowledge. You are getting the best of the best tools and resources based on content that can make you successful. It is only a matter of time that once you start being a part of our live streaming sessions, and once you start taking trades on your accounts, and once you start learning from our education content series, that I am sure that you will be doing fantastic, right, in the coming time, because it is only about learning and implementing. Learn from the right resources, whether it is people or whether it is content, and implement those, right? It's not just about learning and thinking, it is about learning and taking action as well. People who take action get what they want, right? So I hope everyone has been having a clear understanding of what we have been discussing in today's live stream session. It's been completely focused on risk management, where people who think that it is just based on stop losses and nothing else, and that is completely wrong. It is risk management is far beyond just putting stop losses. It involves a whole lot of procedures that people are not aware of, right? Some of you are aware of hedging as well as adding positions, but there are quite more options as well. And all the information will be provided to you as and how we keep progressing through the live streaming sessions. Am I clear? If you have any doubts, if you have any queries, you can always let me know in the comment section below, because when Harsh is here, there is nothing to fear. Correct? I keep saying it to all my clients and to all my viewers. When Harsh is here, there is nothing to fear. Any doubts, any queries, any questions, please feel free to write it in the comment box, or you can get back to my team of assistants, and we will definitely work out a situation where we can help you resolve your queries. So I hope everyone has had a great learning and thank you for each and every one of you who has been present till the end of the session. To those of you who have been present till the end of the session, I would personally would want to congratulate and give you an applause for putting in the time, putting in the energy, and putting in the dedication when it comes to learning about concepts that very few people are talking, right? Hardly anyone is talking about these concepts that actually require the main focus, right? It's not just about price action, technical indicators. It is much more beyond that as well. We will be covering technicalities as well as price action in the upcoming courses, but first we have to be clear of our foundation. If our foundation is clear, then we can build upon the foundation and keep building, higher amounts of content. Whether it's similar to a building. If the foundation of the building is strong, only then the building can progress vertically. Correct? How many of you are agreeing with me? We need to focus on the foundations, right? Before you even get into trading, or for those who have not had a right amount of exposure when it comes to the markets, now is the time. So keep attending our live stream sessions and take benefit of our sessions, because we are here to provide you with exceptional content, and we are doing it quite well. So I hope everyone has learned quite a good amount of knowledge from today's live stream sessions. And I thank each and every one of you for staying till the end and learning as much as possible. So make sure to return back for my first live streaming session, where we will be talking about the market conditions as well as talking in detail about trading logic. And I hope to see all of you over there. Once again, I would love to wish everyone a great day, a great evening, and to all of those who had celebrated Christmas yesterday, I wish you had a fabulous time with your family, friends, and your children. So this is Harsh signing off, and I'll be seeing you in tomorrow for the first live streaming session. Moving on, my colleague Mr. Aditya will be coming in, where he will be talking about main funds. That is also very interesting. And for those of you who want to keep attending the session, he will be taking on from now on. All right. So everyone, make sure to come tomorrow for my live streaming session, which will be taking place in the morning. Until then, have a great evening. This is Harsh signing off. Namaste and take care. Bye bye.